Hi, I'm Ashley with Campbell. Thanks for investing your time to help your community be a great place to live. Before you watch the video, make sure to click the subscribe button so that we can help you make educated decisions as a board member.
So I'm Evan Bradley, Campbell Property Management. I'm one of the partners here of the firm. I'm a licensed CAM. I work very closely with some of our largest associations with the main issues that are affecting them. And occasionally, and unfortunately, one of those is insurance claims. So we've brought in some extra experts today to help us really understand how these claims work and what they mean for your associations. Insurance can be incredibly complicated. And then there's a massive legal component to go with that as well. That's why we have Chad Tiernan and Paul Mack with us from Assured Partners, an insurance firm. And we have Michael Clark, an attorney with Siegfried Rivera, an excellent condo and HOA firm that we've had the privilege of working with. So Chad and Paul, you guys want to introduce yourselves first in the firm a little bit?
Thank you, Evan. Yes, great to be with you again here today. We are condominium HOA community association specialists. Assured Partners has over 3,000 communities insured throughout Florida. And I'm excited to go through this presentation and hopefully give everybody here viewing us some good background and information.
Thanks, Paul. Michael, would you like to introduce yourself and the Siegfried firm a little bit?
Sure. Nice to see you. My name is Michael Clark. I'm a partner at Siegfried Rivera. I'm a board certified construction lawyer. I specialize in insurance as well as construction, HOA, condo stuff. The firm has been representing condominiums, HOAs, and also has a vibrant construction and real estate practice for over 45 years. We represent nearly 1,000 condominiums and HOAs in Southeast Florida, and I'm looking forward to this. Thank you.
Thanks, Michael. So those of you who may not be as familiar with our firm, Campbell Property Management manages over 400 condominium and HOA associations here in South Florida. We do business in Broward, Palm Beach, Dade, Martin, and St. Lucie counties, and we have a pretty even split between HOA and condominium clients. We have over 1,000 employees, and we actually are the highest rated firm on Google. So if you go ahead and Google South Florida management companies, you can read some of those reviews, and I'll let those speak for themselves. So now getting into what we want to talk about today, condo claims and coverage. So what are we going to cover? We're going to talk about the three main areas of insurance: property insurance, which includes your windstorm, your fire, that sort of thing; general liability insurance, which is for risks of injuries and other type of things that could occur on your property that you could potentially be liable for; and then directors and officers insurance, and that's going to cover the actual directors of the association when they're acting in their official capacity, making decisions on behalf of the association. So getting into it now, I'm going to turn it over to Chad and Paul. We're going to talk a little bit about exclusions, limits of liability, and warranties. So Chad, do you want to take it away?
Sure. So throughout the presentation, we're going to reference several different exclusions, limits of liability endorsements, and warranties. So we wanted to just give a couple brief definitions before we get into that later. So for exclusions, that is any condition added to a policy that specifies a type of risk or incident that will not be covered in the event of loss. A limit of liability endorsement is a condition added to a policy that lowers the limit of liability for a specified risk or incident. And a warranty is a promise that certain conditions will be fulfilled by the insured in order to maintain coverage for a specified risk. So like I said, we'll dive into a couple specific examples of these later on in the presentation.
Thanks, Chad. So these terms are extremely important as insurance has gotten much more expensive and as insurance companies have gotten more creative. We are seeing a lot more exclusions, limits, and warranties on policies than we have in the past. And things that you think may be covered or things that may have been covered in last year's policy may not be covered in this year's policy because of these additions. So when you do hear about these exclusions, limits, etc., please pay careful attention. It can make a huge difference in your policy.
Yeah, Evan, just one quick thing to add there, and the difference The reason we're seeing some more of these is because there's a rise in the amount of non-admitted carriers that are writing general liability insurance in Florida, and those non-admitted carriers can put those endorsements, exclusions, warranties, limitations on their policy without having the Department of Insurance approve these forms ahead of time. So it is very important that the association knows or talks to their agent and is aware of those.
Right. Okay. So getting into property insurance, why don't we start with the basics here, Paul? What is property insurance?
So property insurance, looking at a condominium association, for example, a condominium association is going to need to cover the residential buildings, the habitational buildings where the owners and the members reside. If it's a high-rise building, it's maybe one or two high-rise buildings on the beach. If it's like a townhouse or a villa-type building, there may be sprawled out throughout the community. And if it's a homeowners association, there could be various types of improvements or assets that they need to cover, like clubhouses, security gates, other improvements like swimming pools and things like that. And that's covered. We say it's first party because it's directly covering the association's assets or improvements that they need to protect from perils such as windstorm, fire, lightning, vandalism, and theft, to name a few terms.
So kind of getting into some of the more specific things, particularly in condos where there is a lot more property to insure, what's typically covered under the policies?
Yeah. So good thing with condos is condo law is going to define what the association policy needs to provide. So when we have there that on the first bullet point that says unimproved drywall, so that would be the unfinished drywall going outside of the unit, everything behind the drywall, and then the actual exterior walls, the roof. Consider it like this, the actual structure or the shell of the building, including the roof, machinery, air conditioning equipment, fire alarm systems, electrical components, the plumbing, all of the guts or the components of those components of the building need to be covered. And
Gotcha.
landscaping is not, we have a question mark there by landscaping. Landscaping is not going to be a covered peril under a property insurance policy. An association can buy what we call a parametric policy, and you could use those dollars to cover landscaping, but a standard policy is not going to cover landscaping.
Gotcha. Michael, did you have any thoughts here?
Yeah, well, detached structures, landscaping, especially when you're dealing with a condo, with a single building, with a tower, a lot of times you'll have schedules, things will be rated, and really those schedules are going to control, which is why landscaping and detached structures are question marks. The important thing to remember, as Paul pointed out, is that what is covered is statutorily required under 718-111 for condos. So it's fairly simple, but as with every insurance policy, an insurance policy really is a contract. So the language of the contract is going to be what controls. So it's very important to read everything that's in there, which includes the warranties, the limitations, and the exclusions that they were talking about earlier, as well as the insuring agreement, which is where it all starts.
Thank you.
Yeah. Evan, I would add real quick too that, when we talk about the schedules, as Michael mentioned, I would urge all the viewers here to be aware of the appraisal. Condo law requires you to do an appraisal every 3 years. So I would, as a director, get familiar with that appraisal, because that's going to be the predominant document that your agent is going to use to develop a schedule of values and the application to the insurance companies. Because sometimes the insurance company will omit items on that appraisal, and you need to make sure that the values and what has been put onto the insurance policy, as Michael mentioned, are the same as the appraisal, and if not, ask why.
Gotcha. Okay. So a very, very common question that we get from owners in condominiums is, there's been damage to my unit. Maybe it started with the property above me. Maybe it started property 5 floors above me. Who is responsible for this? And will the association's insurance, pick up my damage? Because, in their mind, it wasn't their fault. So, Michael, how does that actually work in practice?
Happens all the time.
Mm-hmm.
All the time. First of all, it's important to keep in mind that oftentimes the governing documents of the association, and it's, I would say, almost all the time, the governing documents delineate the insurance that the unit owner is required to have, right? So just because the loss started in the unit above, and it's the easiest one to do because it's the one that happens most often, is that there's a leak in the unit above and it flowed down. The association's policy is just going to cover that which it is intended to and contractually required to cover. It's going to cover the unapproved drywall out, period. It's not going to cover the personal property, and it's not going to cover the limited common elements if there was any damage to those limited common elements that are within the unit. Those are covered by the associations, or not by the association, excuse me, by the unit owner's policies. Now, how that all works out in the wash, it seems incredibly unfair, right? It seems incredibly unfair that I didn't do anything wrong. The water came from the unit above me. Why is my policy the one that has to stand for it? And the way that generally comes out in the wash is by subrogation. So once your insurer pays for your loss, your insurer will then go back and what they call subrogate, steps into your shoes and sues the people above you, and generally works it through with their insurance for the damage that was done. But, the insurance law is always changing. It's, annually, it seems like, because there's been such a rise in policies and with hurricanes and everything since, the early mid-2000s. It seems like every year there is significant overhaul to the insurance law. And the new law that we've got is on subrogation that was recently passed. And what that says is that if the condominium association's policy doesn't provide that right of subrogation, if the condominium association's policy doesn't allow its insurer to sue the wrongdoer, then the unit owner's policy similarly can't do it. So it's kind of what's good for the goose, good for the gander thing. It's a little bit complicated. So this is one of those things where if you find yourself embroiled in it, probably want to talk to the association's attorney. They should probably know what's going on with that. And the other comment that I'll make, just as far as things changing from year to year, and it's kind of tagging on to something that was talked about earlier, it's not as simple as I think Paul mentioned that, the policies can change from year to year. They can. Policies can change from year to year, but an insurer cannot simply, quote unquote, renew the policy and change the coverages. They can't do it. It's something that's often overlooked that a lot of people don't know. So if you find yourself in that circumstance, again, it's an issue. You should probably reach out to your condo's attorney.
Thanks, Michael. So getting more in depth with the property insurance, what are the different important considerations that people have to think through as they're looking at their insurance coverage, Paul?
So when looking at a insurance policy, particularly like we say, covering improvements, the special form is the broadest form you can buy. So versus like say a named perils policy. So if an association is forced into Citizens, you should know that Citizens provides only what we call a basic peril policy. So basically it's fire, lightning, and wind. And if you're going to buy that Citizens policy, hopefully your agent's going to recommend that you buy a supplemental policy known as a DIC, or difference in conditions policy, which buys those perils up to a special form. And an example of those perils would be water damage, because fire, lightning, and wind isn't going to cover, the Citizens policy isn't going to cover a sudden burst of a pipe or, some kind of water damage from the unit above that damages the common element. If you're dealing with private carriers, most likely the private carriers will issue that special form, and that's the broadest form that you can buy. And also, every property insurance policy is going to have a deductible, which is the amount of loss, or after a claim is submitted, that the policyholder would retain after a claim. And there's going to be various deductibles on these policies. You could see multiple deductibles for, like, for example, there could be a fire deductible, and then there could be a separate deductible for water damage. There's always going to be a deductible for hurricane or windstorm that is going to be a percentage of the valuations of the building. So if the building is insured for $10 million and the deductible is 5%, we've got a $500,000 deductible for wind or hurricane. And if there's a fire, perhaps that deductible would be $10,000 per occurrence. So it's important that you understand how the deductibles work on your policy. And another important consideration, where we have written down there RCV versus ACV, what that stands for is replacement cost valuation versus actual cash value. And the difference in the two is replacement cost is new for old, and actual cash value is basically old for old, because it'll depreciate the property. Very common right now with this whole issue that we covered when we did our last webinar regarding roof ages and all that happened with all these claims that occurred. So insurance companies are really mitigating their risk, and they're saying, well, we'll insure you if your roofs are old, but if you make a claim on these roofs for anything like a fire or lightning or a hurricane, we're going to pay you old for old. We're going to depreciate the value of that roof, and if it's at the end of its useful life, there isn't a whole lot of money the insurance company is going to pay out, versus the replacement cost valuation, which is they're going to value it at a brand new roof. Obviously, replacement valuation is a lot better than actual cash value.
All right. So there's a few more additional considerations, I think, in here. You want to talk about those a little bit?
Sure. So a couple endorsements on here that I think we want to mention because they're important. So pre-existing damage exclusion, and this states that any unrepaired damage to a property that is present prior to a new policy is in place is not going to be covered if there's a loss on the property. So if there's a hurricane that causes new damage, if there was already some damage on the building, that's not also going to be included in getting paid out with that new loss. So that's something that's very common on property policies, but it's just something to be mindful of and definitely, understand. And then, as Paul mentioned, the roof actual cash value endorsement is something that they'll slap on to the property policy if you have an older roof there and they're going to value you at actual cash value. And like he said, you would want replacement cost. That's the ideal valuation. So this is something to look out for. But if you have older roofs, it might just be non-negotiable, and they might just have to value you at actual cash value.
So
The
interesting,
go ahead, Michael.
if I could, is that the statute requires the association to have replacement cost coverage. So while the carriers might be trying to do one thing, the association's obligation under the statute is for replacement cost. What will happen a lot of times is that the insured or the insurer will only pay out the actual cash value. They'll only pay out the depreciated amount until the work is done. Sorry, Paul.
Correct. That's kind of on a standard replacement valuation, where we call that in the industry holdback. And you bring up a great point, because although the market is getting a lot better right now, last year it wasn't uncommon for an association to not have any option anywhere to get a replacement valuation. So what happens in that case when the association is obligated by their bylaws to buy replacement costs, but it's just not available? That's a big
question.
Yeah. Just kind of pointing that out because
they have to go out and find it. They have to buy that supplemental coverage you were talking about.
Yeah, but and in in the past year, it hasn't been available, and in some cases, it still may not be available. And I think that could be an issue if you can't get it because your roofs are too old. Now, a lot of those associations recognize this, and they're moving as swiftly as they can to replace these roofs. And then once those roofs are done, they'll be eligible for replacement cost coverage. So, yeah, I think that's a great point you bring up. But Evan, just to quickly get over the rest of these items on this bullet point, I think, we talked about a warranty being a promise. So in the case of the protective safeguard and the electrical panel and aluminum wiring, so a warranty could also be something that when you fill out an application, the process is that you fill out an application and the insurance company evaluates the application and then they offer insurance or they decide not to offer insurance. But what a warranty does is takes it a step further and they say, well, on the application, you've told us that you don't have any hazardous fire panels or you don't have any aluminum wiring in the building. We're going to write it in the policy that if you do have it, we're not going to cover it. So it's important. And this is where having an insurance agent that understands community associations and can help the association manage this and get through this, because the reality is most board members are not insurance experts, and having an agent that is going to be transparent and help you through these issues and explain all these to you is the greatest value that an agent can provide. But protective safeguard warranties are going to say that your smoke detectors are functioning in every unit. And in some cases, the association doesn't even have the ability to go in those units and check them. So how or why would you ever warrant that? Electrical panels are a big issue right now. We covered that in one of our last workshops that we did. And it's becoming more and more common right now. And the same with aluminum wiring, fire hazard. So if you've got that aluminum wiring, a lot of companies are just going to throw it in there. If your agent isn't reading that and disclosing that to you, you're going to find out that these warranties exist when you file a claim and they write you a big long letter and say, hey, there's a warranty in here and we found aluminum wiring that caused the loss. We're not paying.
Thanks, Paul. So this, I think, is an example of protective safeguards endorsements. So a lot of fine print here. What do you want us to take a look at?
Yeah. So this is the actual endorsement that's on that policy. And you can see by just glancing at that, there could be a lot of things the insurance company can use. These are pretty standard endorsements. So they could put any one of those things in there, whether it be smoke detectors, fire alarm systems. These are used commercially as well. So, and in some associations, they have cooking in a kitchen where they would warrant ANSI systems. So all of those things, sprinkler systems, another big issue. So, sometimes the sprinkler systems are turned off for service, that sort of thing. So these warrant that they're always going to be in working order, and very important that if they exist, somebody, an agent that understands how to read them can explain to a board in plain English what's required.
Right. So I think this is an example of what you see with the actual cash value.
That's correct. Yep. You'll see there that, hey, what they're saying is, and this is very common right now, especially if your roofs are old. If anybody on here has older roofs and they're with like a Lloyd's of London or a non-standard carrier, I would be looking for this, or I'd be asking my agent if this exists, and be aware of it. I mean, like we just talked about, in some cases, there isn't anything you can do unless you're going to replace your roof right now.
Mm-hmm. All right. So what happens in the unfortunate event we actually have a claim? So under property, we've had perhaps fire damage, windstorm damage. What do we do?
All right. We could do a series of 1-hour webinars on this easily. You've got, again, an insurance policy is a contract, and the association has post-loss obligations in that contract. There are conditions. You have to report the loss timely, first of all. The insurance company is going to be able to require and request whole bunch of documentation. They're going to be able to require and request an examination under oath. and you are required by your insurance policy to mitigate your damages. In other words, if there is something that happened, and because of what happened, the damage could get worse and worse and worse, you have an obligation to do what you can to stop that damage. The easiest example is if you have roof damage from a hurricane, you can tarp the roof. But the post-loss obligations aren't just, and the ones you should focus on aren't just what you're required to do, it's what you should do. Document, right? Especially with wind losses. Knowing the condition of the building beforehand, or maintaining the accurate records of the association as to how the building was maintained, because the insurance company, if you end up in a fight, is going to allege that you failed to properly maintain the building. Document, and be diligent. That's really the easiest thing to remember.
All right. And then mitigation.
Mitigation is be diligent. I mean, it's just, if you can stop damage from getting worse, stop damage from getting worse. If you can take action, take action. But be very careful, because if you change the condition that the building or the structure was in after the loss, and the insurance company hasn't had an opportunity to look at it, make sure you document it very, very well, and you could still end up with a little bit of pushback because you failed to allow them to inspect the condition, and you failed that post-loss condition. If you have a significant claim, it's helpful to get advice, because I used to sit on the board of a 360 unit condo tower in South Beach in Miami. It's the most thankless job in the world. So for those of you that do it, thank you. And you're not an insurance professional, just like you're not a contractor. When it comes time to do a project at the building, you're doing the best you can to govern and to steward the building. But a lot of times you need help. This is one of those instances.
Thanks, Mike.
Yeah, Evan, if I may just add something on there real quick, like
Sure.
Michael said, the association has an obligation to prevent further damage, make immediate repairs. So we often get calls, hey, can we do this or should we do that? And, the association has to use its best judgment. And like Michael says, having an expert, having people come in there that say, look, you need to do this, spend the money, document it. One of the things that we do for our clients is arrange for a drone to fly over the property before the loss and after the loss to help document what actually happened during the hurricane. And, that drone will fly coordinates, and they'll fly the exact coordinates, and it helps document that. So that's one example of how documentation can help the association with a claim.
All right. Thanks, Paul. So, Michael, there's a little bit more here about claims. Did you want to a little more in depth?
Sure. And again, we could go over this forever, but it's always important to communicate in writing, communicate everything in writing. As Paul said, you've got an obligation to make repairs, but communicate that in writing. Make sure that you send to whatever adjuster has been assigned to your building. Make sure you send them an email that says, hey, we're going to do this. And by the way, we're doing it in 3 days. So if you don't let me know, we got to do it, because we have this obligation. You communicate in writing. You be clear in your communication. Number 2, when the insurance company comes back and says, this is the amount of money we are going to give you, it is not always right. Believe it or not, sometimes they don't pay you everything to which you are entitled. Sometimes they don't. Sometimes they're going to pay you, to fix a roof, when under the building code in the county in which you are in, if X amount of the roof has been damaged, they have to replace it, and it must be replaced. And therefore you are entitled to replacement from your insurance company. You're entitled to be put into your pre-loss condition. That's the policy you are buying. And so get a second opinion. And number 3, there are legal obligations, those conditions I was talking to you about earlier. Another one is that you were required to submit a proof of loss. If in some policies, you just have to submit one. In other policies, you have to submit it if the insurance company asks for a sworn statement and proof of loss. Depends on the policy. Finally, you're not the only person or the only one with obligations. The insurance company has obligations. They've got to acknowledge a claim within 7 days, which when there's a big storm is hard to do. They have to either deny or pay a claim within 90 days. Actually, the 90 has recently been switched to 60, but they can still ask for 30 extra days if conditions warranted from the Florida Office of Insurance Regulation. So the insurance company has obligations too. You need to be aware of them, because if you don't call them on it, they might not comply.
Thanks, Michael. So we all know how expensive insurance is. This is probably the #1 question I'm hearing right now as we did budgets going into 24, and I'm sure we'll hear it again going into 25. I have a lot of people asking, can we, quote, self-insure, which I think to them means not carry the property insurance. And I'm monitoring the chat here. There's a few people asking, can the owners waive it? Can we not purchase it? So what is the association, the condo particularly, the condo association's duty to insure its building?
You have to have insurance. It's required by the statute. It's required by the governing documents. There are conditions under which you can self-insure. They are way too complicated for this, but what it essentially means is that you either establish a nonprofit organization that has adequate money to pay for the replacement costs, or you band together with other associations who pool their resources in order to be able to replace things when it gets damaged. Frankly, it's just not feasible. I have not seen it done. I'm sure it has been done, but generally it's not feasible. You have to insure the building. As if you are a board member, and listen carefully, the one thing you don't want to do as a board member is have somebody argue that you breached your fiduciary obligation to the association. And everybody complains when their monthly assessments go up, when their maintenance goes up. Everybody complains. I've sat in those meetings. I've sat on both sides of the table at those meetings. It's hard to hear. And they complain about the rising cost of insurance. When you have a significant loss, those same people, and you aren't insured, those same people are going to say you were statutorily required to have it, you didn't get it, and you breached your fiduciary obligation. You personally, not a position you want to be in. You cannot reasonably self-insure. You have to have insurance.
Thank you, Michael. So now we're going to get into general liability insurance. So Michael, and what exactly is general liability insurance?
So whereas property insurance is first party, general liability insurance is third party. It's important for the association and it's important for its contractors. And we can actually go through the first couple of slides, because what it does is it covers and provides indemnity, pays money for liability that the insured becomes legally obligated to pay. What does that mean? That means if something happens and you get sued as a result of bodily injury or property damage, and you have general liability insurance, general liability insurance will come in, it will defend the claim by which somebody is suing you to impose that legal obligation on you for the bodily injury or property damage. So it will defend the claim, and under some circumstances subject to limitations and conditions and warrants and endorsements and exclusions. Some instances, it will go ahead and also indemnify you. So it will also pay for that damage. Simplest example is as a result of some sort of association activity that is not excluded, a window gets broken or something falls on somebody's car that's parked next to the building, and that car is damaged. The owner of the car comes back and sues the association for the damage. The GL policy typically will cover that.
Right. So there's a bunch of things that it doesn't cover as well. So
yeah, so it covers things when there is property damage and bodily injury. If there is not property damage and there is no bodily injury, it won't cover it. So if people are complaining and are alleging that the association is liable for something that doesn't come from bodily injury or property damage, breach of fiduciary obligation, misappropriation of money, that kind of deal. That's not under your GL policy. That's under the D&O policy a lot of times, which we'll talk about later. And the other thing it does not cover is a voluntary payment. So if somebody alleges against the association that they are liable for this bodily injury or property damage, and the association goes and resolves it with whoever's complaining and doesn't first give their general liability insurer notice, it will be considered a voluntary payment. And when it is a voluntary payment, your general liability carrier will likely not cover it. The other thing that's important, and I didn't put it in the slides, but it's really important for the association to make sure that your service providers, and I'm a construction lawyer, so I always think contractors, have general liability insurance. Because if your contractor has general liability insurance, say it's your roofer, and the roofers does their work wrong and causes a whole bunch of water intrusion that results in a whole bunch of angry unit owners, they can go back against the roofer. They can also go back against the association. The association should be named as an additional insured, and that general liability policy will cover that resultant damage. It won't cover the defective work, but it will cover the resultant damage. It's an important thing to think about when you're contracting with your providers, which is something that you should be talking to your attorneys about.
So Paul, there's some important considerations when purchasing GL coverage. So what are those, and what do the boards need to be aware of?
So generally, general liability policy limits are $1 million per occurrence, and a $2 million aggregate, which the aggregate is the most that it's going to pay for the term of the policy. So if it's January 1 to January 1 and you submit claims to the sum more of $2 million, the carrier's obligation is ended. And the same for when the occurrence limit, God forbid there's a wrongful death or some catastrophic claim. Once that carrier has paid $1 million for that occurrence, their obligation to pay anything further has ceased. So it's important to get excess liability or umbrella coverage for those catastrophic losses. And then oftentimes with many of these non-admitted carriers, we see limitations to that $1 million per occurrence limits. So things for like, which we'll get into here in a minute, like for assault and battery or animal bites, they may exclude it altogether, but they may say, well, what we're going to do here is instead of giving you $1 million per occurrence, we're going to give you $50,000 per occurrence. So associations have to be aware there's tremendous pressure on boards to lower insurance costs. And I will say that not all insurance policies are equal, and not all insurance agents are equal. So if an agent brings you a non-standard carrier and says, oh, this is apples to apples, it's the same thing, you either better trust that agent or you better ask some questions, because you could be saving a few dollars, but there may be a reason you're saving a few dollars. And the reason is these exclusions or limitations that you see on the screen exist.
Yeah, so we've seen some of these in action, and it's dangerous, because the reason these things get added are that they are more likely to happen than a lot of other things. And then when they do happen, they tend to be very serious. There aren't typically any minor firearms issues or minor assaults and batteries. When these things occur, they are very expensive. The losses are very high, and that's why they're being excluded. But the whole reason you're purchasing insurance is to protect against the risk of a serious loss. So if you're not covering these things and it happens in your building or on your common property, your owners could be on the hook because you don't have the proper insurance coverage. So you got to keep that in mind.
For sure. We've got some of these endorsements in slides that we could go through. I mean, some of them are pretty self-explanatory of what they cover. Here's one that I find particularly concerning, especially now that milestone inspections are going on, 40-year, 30-year inspections in Miami and Broward are going on, and basically what they say here is we're not covering these construction activities that occur on your premises. So you've got a roof project going on, a piece of equipment or some debris falls off the roof, God forbid, causes a serious bodily injury, they say we're not picking up those construction activities. So what does an association do? You have to buy a supplemental insurance policy to pick up that exposure if the carrier won't remove this exclusion.
Well, and the other thing, Paul, just to jump in, that's why it's important that the construction professional have general liability insurance and that the association be named as an additional insured. In that instance, the association would be covered by their GL policy.
That's correct. Yep, you are 100% correct on that. And then you could buy a supplemental policy to cover, a contingent exposure. Well, if that policy didn't respond for whatever reason, because as an additional insured, the association has limited rights under that policy. And the most glaring issue is the insurance company has to recognize that the contractor, the named insured, is negligent and triggers his policy. Otherwise, there's no benefit to the association. So that's why I think it's important to also have that contingent exposure policy coverage in place if that exists. And here's another thing here. This exclusion injury to independent contractors. And we had a situation where the association hired an electrician, didn't get insurance. There was no workman's comp, and one of the employees was up in the building and hit a live wire and got injured. And even if you do have workman's comp insurance in Florida, you can what we call double dip. So the injured worker can collect workers' comp from his or her employee or employer and also go after a third party that they deemed to be negligent for the accident. So if you have this exclusion on your policy, there will be no coverage to the injury to the employee or the contractor that's on the site. So very important. And then the same thing here with independent contractors and subcontractors limitation. We go into, animal bites here. Sometimes they're pets. These are, like you say, Evan, the most severe. They tend to be, and the reason these exist, if you go on Google and you do a search, it's California, Texas, and Florida have the most animal bite occurrences it's a big exposure. So, hey, great. We got a liability policy and, we can save $20,000 a year by buying this policy. I think you need to understand what's in it.
Right.
One other thing I'd like to cover before we move on from this, assault and battery, they'll limit the amount of coverage, but there's two endorsements on here that I don't believe should be on any community association policy. A little background: insurance companies use these forms. They're standardized forms. So if an association is, and that's the classification limitation endorsement, or also there's also another endorsement in there that does basically the same thing. So what that says to the association is, on the declaration page, if we don't rate for an exposure, then we're not going to cover it. So, for example, if the association has a liability insurance policy and it says we're charging you for the number of units in the community, but you have a swimming pool, but you have boat docks, but you have a gym, all those are rateable classifications. So if you omit those and there's a loss and you have that classification limitation, they have a way of wiggling out of paying a claim. And in my opinion, those endorsements are used by insurance companies that are on exposures that are constantly changing. If you're a manufacturer and the insurance company doesn't want to insure maybe a product that you're going to manufacture, they put that on there to protect themselves. But let's face it, an association isn't going to change. They're not going to, start manufacturing or selling fireworks or creating an exposure that the insurance company doesn't know. So oftentimes, all you got to do is ask to get it removed, and you've eliminated a way for the insurance company to wiggle out of paying your claim. And I'll say it again: that's where you have an agent that understands this and is doing his or her job. That's the value that an agent has to a community.
100% what Paul says. And it's astonishing that these policies get issued. And Paul sees it when he's procuring insurance for an association. I see it when the association gets a roofer to re-roof the association's buildings, and the roofer provides a GL policy that has a condominium exclusion, in which case the roofer's policy is absolutely meaningless and ineffective as to the association. So when it's your policy, make sure your agent checks it out. When it's your provider's policy, somebody should check it out, being an agent or an attorney.
Absolutely.
Great
So
point.
you had talked, so the swimming pool one, Paul, this is a new one also on the warranty. Talk about this one a little bit.
Yeah, it shouldn't exist, honestly, Evan. I mean, I get it. The insurance company wants to make sure that exists, but as an agent, trying to help my clients, I'm going to say to the insurance company, go out there and inspect and see what's out there. Make sure these conditions exist. Sometimes you can't get it removed, and if you can't, okay. But these conditions could change. Somebody could vandalize the self-latching gate, and tragically somebody could drown in the pool. So you just want to eliminate any way that an insurance company can wiggle out of paying your claim when you're trying to do the right thing.
All right. You talked a little bit about classification limitations. So why don't we move on now to D&O insurance? So let's talk about, Paul, what is D&O insurance and how does that affect the officers and directors of the association?
So in its simplest definition, it's management malpractice. Every association has a board of directors, and those directors are making decisions every day, collecting money, hiring vendors, doing all this thing. And somebody can allege that a director made a bad decision and it caused some kind of a loss. So we buy D&O insurance to basically protect the D's and O's and the entity, because likely, and Michael could probably confirm this, but most bylaws have an indemnification clause where the association has to indemnify its directors for that, and then the D&O insurance becomes the financial mechanism to provide that defense and indemnification for those type of claims. And we see them all the time, anything from simple like, hey, this big assessment that you're assessing us for to do all this stuff, you overspent, you didn't get bids, you didn't do the right job, you overpaid for lousy work, or somebody's trying to sell a unit and the person doesn't qualify, and that person, gets denied, and then they sue for various reasons. So those are kind of real life examples of what we see on the D&O claims.
So there's a bunch of stuff that D&O is not going to cover, kind of most of the things we've already talked about, but fraud and crime in particular.
Intentional acts. Yeah.
Right. Intentional acts. And also if the underlying result of the liability or the underlying cause of liability is property damage, a lot of times the D&O won't cover it. But Paul, is there something, if the association's concerned that there's going to be a gap between the D&O and the GL, is there something that they can buy?
Yes. So there's a policy now that's been out for a few years, and we call it a legal gap policy. So, both the D&O and the general liability have standard exclusions, and there could be instances, happens fairly frequently, where the association is served a summons and they're getting sued, and they turn it over to the insurance company. The insurance company evaluates it and writes a letter and says, hey, we're not covering this for a variety of reasons. So you could buy an insurance policy. Once you have that denial letter, you would submit it to your legal gap carrier, and that policy would provide legal protection in the event that you're sued, and the insurance policy, the general liability or the D&O insurance, doesn't provide the coverage. As a gap, you can at least pick up the cost to legally defend that lawsuit. The association is going to have to come out of pocket to settle it, but in many cases, the cost to defend it is as much or greater than the cost to settle it.
Mm-hmm. Mm-hmm. That's great. So, Paul, there's some other considerations here under the D&O. What is a failure to procure exclusion?
Yeah, this is kind of an important one. So directors insurance, again, covers management malpractice or bad decisions. So if what we talked about in association, I mean, I get calls all the time when we don't want to buy wind insurance. So, okay, you make a conscious effort or an intentional decision not to buy insurance. The D&O carrier does not want to now be the windstorm carrier because you didn't buy it. And if some of the members come after, like Michael said, well, the same ones that are going to say that it's too expensive, don't buy it. Whenever there's a loss and you got to assess them, now they're going to say you should have bought it, you were required to, and you didn't. That was a bad decision. the D&O carrier is not going to pick that up. So that's where you see that failure to procure insurance is in there. And it basically says in legalese that if you decide that you don't want to buy insurance for something, we're not going to pick it up if somebody sues you for making that bad decision.
Right. So, Michael, similar to the other policies, what do we want to do if we feel like we've got a D&O claim?
You got to report it immediately. And it's not each policy, or not each policy, but there are a number of different definitions of claims. So as soon as you smell trouble, talk to your agent. As soon as you smell trouble, talk to your agent. It is, and one thing we didn't really touch on here, it's a claims made policy. So the D&O policy to be noticed is the policy at the time that the claim is made. As a consequence, if you notify everybody as soon as you smell trouble, and then you continue to notify them as the trouble escalates, you'll put everybody on notice. The GL policies we're talking about earlier are occurrence-based policies. So that really, those policies that are triggered are the policies when the damage or bodily injury occurred. But the rule of thumb is talk to your agent and talk to your attorney if you have one, and just put as many people on notice as you can as far as the carriers go.
Yeah, that's great advice, Michael. And I'll just add to that from an insurance agent's perspective is the claims made is a double trigger. So like Michael says, it has to pick up the incident when it occurred. So it looks back in time. And because it looks back in time, it's not advisable to switch D&O carriers unless you have to. So it's generally, when you look at your overall cost, a very small percentage of the cost of insurance. So don't be penny wise and dollar foolish and try and save, $100. And now you've reset all of when you fill out a new application, if you knew of something or somebody who was an insured knew of something, that's probably not going to be covered under the new policy. So it's probably not worth taking the risk to switch it. Now, in some cases, the D&O carrier is canceling you. You have no choice to move. But if you do have a choice to move, and it's a little more to stay with the carrier you're with, it's probably better to do that.
Well, all right. So at this point, that's the end of our presentation. We got a few minutes left for some Q&A. So I put up all our contact information. If you want to reach out to us, please don't hesitate. And we'll see if we can get through a few of these. So, Mike, I think there's a question for you. A lot of claims are very sensitive. Can the board meet to discuss the issues and advice received from the attorney and their professionals in a private working session?
Yeah, yes. The answer is yes. The board can have a closed legal strategy or litigation meeting. There are different notice requirements. But the simple answer is yes, and it is a good idea to do that, because if things escalate, there are really sensitive decisions a lot of times that need to be made. What are you going to claim? What aren't you going to claim? What are you going to do about this guy? This guy has said that, and they implicate things. So it's a good idea to have those closed meetings.
Right. Roll fast. If the community expands their opening hours for the pool into the evening, will that increase their insurance premium? I think if you're talking about night swimming, there's actually some very specific rules that need to be followed around that. I'm not familiar with all of them, but you need to be very careful. Paul, do you have any insight into opening the pool at night?
Yeah, I mean, it could present an exposure. I don't see warranties that say that if you open the pool at night, you're not going to be covered, or any kind of thing like that. So I think you just got to be cautious about taking the additional risk. And is it worth it? Is it in the best interest of the owners?
Well, and the county has regulations too about it, and you need to make sure you're meeting the county regulations if you're going to be open past dusk. So. Colette asks, I think this was related when we said landscaping wasn't covered. So I think she just wants some clarification. Even if all the trees are uprooted in a named storm event, there is no coverage under really any policy for that, correct?
Not on a property policy. No, you can buy what's called a parametric. A parametric isn't it's not like a property insurance policy. It's almost like an Aflac benefit where something happens, they just trigger a payment to you, and you can use that money to pay landscaping. But no, not a standard insurance policy does not cover landscape. There is very limited coverage for landscape, but it's only for the perils of fire and lightning. It does not cover wind.
Right. Deborah would like some clarification. What do you mean when you say unimproved drywall out? What are you specifically talking about?
Exactly as it sounds. If you put up wallpaper, they will cover the drywall, but they will not cover the wallpaper. If you just think of your condominium unit as a box. Think of a unit as a box. So if you take the unimproved drywall, so the wall as it was installed by the developer, and you push outward, everything outside of that is going to be insured by the association. The fancy paint that the unit owner put in, not covered. I think it's at its simplest form.
Right. Someone asked, if the furniture blows off a unit's balcony during the storm and that ultimately damages association property, can the association have the owner put a claim through their policy rather than go through the associations? Or could they subrogate? It's probably a better question.
I think it's going to be a subrogation. I don't think that the owner, actually I'm dealing with this now, where I have an association that's been named as an additional insured on the unit owner's property policy, which I have never seen. In that case, maybe they could do it. Paul's shaking his head too, because he's never seen it.
No.
And now the association's being asked to sign off on a check. But yeah, it's going to be a subrogation issue. You can't really make a claim on a policy, on a first party policy to which you are not party. You're not an insured. You have no rights under the contract.
Right. Someone asked for more insurance aspects related to single family homes and townhomes, because we talked a lot about condos. So, I mean, the short answer is, in a single family home, you're responsible for all of your own property insurance. The HOA would be responsible only for the property of the common area, which is typically a clubhouse, maybe some guard gates, that sort of thing. So it's a much different insurance relationship than a condominium, where they're buying property insurance for the entire building. But anything else to add, guys?
Replacement cost coverage, period, end of story. There is nothing worse than having an 18-year-old roof have a storm come in and damage 50% of it, which means you've got to replace it, and the carrier is going to pay you 5% or 10% of the replacement cost. I personally, as someone that moved out of the tower on South Beach and now lives on a single family home fairly close to the ocean, replacement cost coverage. But Paul, what do you got?
Yeah. I mean, if you can get it on these older roof buildings, we're seeing that now, that carriers are unwilling to do it, which is forcing a lot of associations to scramble and get new roofs. You got a lot more options when you have a new roof, but if it's at the end of their useful life, if that roof is at the end of its useful life, you're not going to find a whole lot of options in the insurance market to write that.
Right. So windows has come up a couple of times. A lot of condominiums say the owner is responsible for those windows, but are the windows covered by the association's windstorm policy? How does that work?
Yeah. You want me to cover that, Michael, or you want to take that?
Well, I'll start with, it's all going to be based on the association's governing documents. Most of the time, what they're saying when they say you're responsible for it is maintenance. But Paul, what do you got for insurance?
Yeah, condo law says that it's covered by peril, but like you say, the governing documents are going to address maintenance issue, and there's a huge difference between insuring it for peril and a maintenance issue.
Right. So if it gets blown in by a hurricane or by a storm, it's the association's policy.
Correct. Doors,
right.
Windows, and air conditioning equipment.
Yep.
Okay. Let's see here. Can a condo building be insured by more than one company to spread the risk around? Paul, you want to talk about that a little bit?
Yeah, we see, especially with these bigger schedules where the values are, $50–100 million. We build a tower where we go in and we get a carrier to write the first $5 million, and then we go and we just layer it up and we get we get carriers to take the risk after, when you get to those top layers, it becomes easier to place. But that's a very common thing right now.
So someone mentioned our provider excluded earth movement and flooding resulting from tidal surge. Do carriers cover these items, or is that kind of a blanket exclusion?
Yep. Earthquake is a standard exclusion, and flood is a standard exclusion on a property insurance policy. So you got to buy separate flood insurance, and the vast majority, if not all of it, in the present market is all written by the National Flood Insurance Program, which is sponsored by FEMA. And the rates are established by the federal government. And we're getting flood insurance, and probably just worth mentioning really quick is FEMA is rezoning all of the Broward County right now. So pay attention to see if you're presently in a low hazard zone, you might be rezoned into a high hazard zone. And then when it comes to earth movement, standard exclusion, not a big issue in Florida. Not that it doesn't exist, but we don't see separate earthquake policies in play here in Florida very often.
All right. Someone asked, are property managers covered under the D&O policy? I mean, I would assume when they're acting on behalf of the association.
Yes, I mean, that's important because all management contracts require that the association indemnify the management company for good reason, because they're an extension of the association. So a D&O policy, if there's a management company, needs to be done by endorsement. And it's common. And also the general liability coverage, there's built-in language in that policy that gives coverage to anybody managing real estate on behalf of the named insured. So that's kind of built in. But on the D&O, you do need an endorsement.
Someone asked D&O, just so you guys know, we're talking about D&O stands for directors and officers. So that's for the board members.
Yeah. Thank you, Evan. Sometimes I get speak insurance ease.
No, I do it too. All right. Well, we're a little after 1 o'clock. We need to be cognizant of everybody's time here today. So we do have a few more questions, but I think we got to most of them, or a variation of most of them. So thank you all, everybody, for coming. We really appreciate it. If you could fill out the poll, it's very helpful to us to make sure that we're providing the right content and making these better for you guys in the future. If you want to see future classes, please go to campbellevents.org. That's campbellevents.org, where you can sign up. We do have many more classes coming as the year goes on. Paul, Chad, any final remarks from your side?
No, thank you guys for having us. We appreciate it. And yeah, if you need any sort of insurance review or policies, feel free to reach out and we can take a look and see what you have. But yeah, just appreciate you having us on here.
Yeah, I said it before, having an agent that understands this is the greatest value. And I think that getting a second opinion without having to commit to moving to an agent is a good idea. Find an agent. We're happy to do it. Find someone that can look it over, give you a second opinion, see if any of those tricks are in there, and that would be wise to do.
All right. Thank you, guys. Michael, thank you so much for being here and providing some free legal advice for us. Any parting words before we go?
It's like the Holiday Inn Express commercial. I didn't stay at a Holiday Inn Express last night, and you just got to know, if you are in the governing crew of your association, you aren't supposed to know all of this stuff. You're supposed to find the people that do, whether it be Paul or me or somebody similarly situated. Don't be afraid to go out and seek help.
Right.
Thanks for watching. For more great educational content, click the subscribe button now.